Welcome back. The Bank of Canada is due to make an interest rate announcement tomorrow morning, of course, and expectations are overwhelmingly on the side of another cut to its benchmark lending rate. That decision will have consequences for the Canadian dollar, and to talk about that, we're now joined by Thierry Wizman, global FX and rate strategist at Macquarie Group. Thierry, thanks a lot for joining us. The Canadian dollar has been under pressure recently, at least 4 or 5 trading sessions in a row versus the U.S. dollar. Is this because of stepped-up anticipation that the Bank of Canada is due to cut?
To some extent it is, but there have been other factors in the market as well. One of them is that, the investor community has lost faith to some extent in the Chinese recovery that's been pressuring commodity prices downward over the last few sessions, including last night. That could also be a reason why the Canadian dollar is weaker this morning, at least.
You and colleagues made the point recently, perhaps as recently as today, that while the Bank of Canada is expected to reduce rates at least 2 more times this year, including tomorrow morning, so are other central banks around the world. And that, quote, in your words, nullifies the effect of a dovish Bank of Canada. How should we understand that neutralizing of the Bank of Canada's moves by similar moves by other central banks?
Right. Now, this was only intended to be a view that pertains to the short term or the next few months, let's say. But of course, one thing that attracts investors to currencies is the rate of interest that is received on that currency. So, of course, we like to think that currencies that have higher rates of interest attached to them are more favorable, more attractive to investors or traders, especially in the money markets, than currencies that offer lower rates of interest. So, of course, if you feel that the Bank of Canada is going to be reducing interest rates by more than the central banks of other countries, well, then it would cause the Canadian dollar to fall into disfavor. What we have now, however, is a situation where it's not just the Bank of Canada that's reducing interest rates, but we anticipate that many of the major central banks around the world are going to be reducing interest rates between now and the end of the year. Federal Reserve, for example, may be starting to cut its own policy rates in September. So might the ECB, so might the BoE. So in that respect, we're not looking necessarily for a short-term disadvantage to the Canadian dollar here, unless, of course, the Bank of Canada sounds so exceedingly dovish in its commentary tomorrow that it leads one to believe that the extent of the rate-cutting cycle will be pronounced, deep, and will start with tomorrow's rate cut. Having said all that, we do think that to some extent over the course of the easing cycle that we're going to see, not just over the next few months, but maybe over the next year and a half, the Bank of Canada will be easing by more than the Federal Reserve, maybe by upwards of 75 basis points more. So over time, we do expect that the yield advantage for the dollar will widen. And we do believe that over time, although not necessarily today or tomorrow, the Canadian dollar will depreciate versus the U.S. dollar.
What has happened to the price of oil as a, not in and of itself, but as an influence on the dollar? We used to hear of the Canadian dollar being referred to as a petrocurrency. We hear much less about that these days.
Yes, and that's because if you look empirically, if you look historically over the last few years, it seems to be that the value of the Canadian dollar has been driven much more by the yield spread between Canada and the U.S., specifically around the 2-year tenors in government bond yields. So I do agree that oil has lost some influence. That might be because that we're having a situation where the U.S. dollar and the U.S. economy is becoming much more of linked to oil, and therefore it doesn't look on a relative basis to be that much of an advantage for Canada anymore relative to the U.S. But I do believe that the value of commodities generally and the value of oil prices specifically still have some residual influence on the value of the Canadian dollar. So in addition to what we're saying about interest rates, anything that happens to the price of oil over time, especially if it's influenced by global cyclical factors like what's happening in China, could have an influence on the Canadian dollar as we're seeing today.
The Canadian dollar now sits at 72.6 cents US. That's down substantially over the past week and a half or so. Do you have a call on where the Loonie is going to be 6 or 12 months from now?
We do. As I said, again, going back to the reference we've made about what the Fed is going to do over this easing cycle versus what the Bank of Canada is going to do. We do believe that over the next few months, there will be gradual depreciation in the Canadian dollar. By the end of this year, we think we could be pressing towards 1.4. That's Canadian dollars to the US dollar. And by the end of 2025, we could be even higher for the US dollar versus the Canadian dollar, maybe closer to 142. Just take the reciprocal, of course, to convert it into the amount of US dollars per Canadian dollar.